Gold and silver have slipped into a holding pattern after that explosive move we've seen over the last couple of months, and there's a good reason for it. This week is loaded with market-moving economic data. Because of the recent government shutdown, the January U.S. jobs report and the January inflation numbers got pushed into the same week, which is unusual and has traders on edge. On Wednesday, we get the employment situation report. That's non-farm payrolls, unemployment, and wages. And then on Friday, we get the Consumer Price Index, the key inflation gauge. Wall Street is looking for modest job gains and unemployment holding around the mid-4s, with wage growth and inflation both cooling slightly from late 2025. In other words, the base case is steady, maybe a touch softer, not a booming labor market and not runaway inflation. Here's why that matters for gold and silver. If jobs and inflation come in weaker than expected, that reinforces the idea that the Federal Reserve will have to cut rates sooner and maybe more aggressively into 2026. Lower real yields and a softer dollar are usually bullish for metals, so a downside surprise in the data could be the spark that pushes gold convincingly above the 5,000 level and gives silver another leg higher. On the flip side, if the data surprise to the upside, stronger jobs, hotter inflation, markets may have to dial back those rate cut expectations. That could firm up the dollar and push yields higher, which tends to pressure gold and silver in the short term and could knock prices back deeper into the recent range. Most mainstream strategists right now describe gold as consolidating with a positive bias, supported by ongoing central bank buying and fiscal concerns. But they warn that volatility around these data releases is likely to stay elevated. For silver, the tone is a bit more cautious. Analysts respect the long-term bullish case driven by industrial demand and structural deficits, but they expect bigger swings and the potential for sharper pullbacks along the way. So the bottom line for this week, the market is essentially in wait-and-see mode. Gold and silver are coiling, traders are tightly focused on Wednesday's jobs print and Friday's CPI, and whichever way those numbers break is likely to decide whether the next big move is a breakout or a deeper correction. As always, this is not investing advice, just the news and educational information. Always do your own research and consult your financial advisor before making any investment decisions. If you are looking to stack gold or silver and need a US-based company that you can trust, we recommend Money Metals Exchange. You can find more information about MME in the link below in the comments area. Be sure to subscribe, like, and share our YouTube channel with others who want the latest updates in the metals market.